The United States Senate approved legislation on Thursday to temporarily raise the federal government's $28 trillion debt limit and avoid the risk of a historic default this month, but put off until early December a decision on a longer-lasting remedy. The Senate voted 50-48 to pass the bill following weeks of partisan fighting. Earlier, 11 Republicans voted in favor of a procedural vote allowing the bill to proceed. The Senate-passed bill now goes to the House of Representatives, which needs to approve it before President Joe Biden can sign it into law. The House will hold a vote on the bill on Tuesday, according to the Office of the House Democrat, Steny Hoyer. The $480 billion increase, which would lift the debt limit to $28.9 trillion, is expected to be exhausted by December 3, the same day that funding for most federal programs expires under a stopgap measure passed earlier this month following another partisan standoff. That means that over the next 8 weeks, the bitterly divided Congress will have the twin challenges of finding a middle ground on agency spending through September 2022, ranging from education and foreign aid programs to immigration enforcement and airport security, and avoiding yet another debt limit meltdown. The vote followed a months-long standoff that brought the nation close to the October 18 that the Treasury Department forecast as when it would no longer be able to meet its obligations. The plan emerged on Wednesday after top Senate Republican Mitch McConnell said Republicans were open to a temporary hike after twice blocking Democrats' attempts to raise the cap. That offer came after Biden raised the possibility of bypassing the Senate's filibuster rule requiring 60 of the 100 members to agree on most legislation. Not all Republicans were happy with McConnell's move, and it took long negotiations behind closed doors to secure enough Republican votes to advance the measure. Earlier in the day, news of the negotiations drove Wall Street's main stock indexes to end sharply higher in a broad-based rally. In a sign of bond market relief, the yield on one-month Treasury bills fell to the lowest point since September 8 as investors deemed that the risk of default had eased. Washington's debt limit troubles are unlikely to be resolved with passage of the short-term increase.